Hey, Bulls and Bears, back with another dose of economic reality. The inflation numbers are out. Everybody's talking about it in the financial world. That's just the tip of the iceberg. We got a lot more to get into. Please make sure that you like, subscribe. Let's go ahead and get into the news right now. All right, everybody, let's get started right here. Another high for inflation. Inflation just got worse, and every month we continue to tell you this, that prepare for things to get worse. And of course, there'll still be people down in comments telling me that I'm wrong, that I'm fear mongering, but yet things are continuing month after month to unfold exactly like we've been indicating right here. So this number, not a surprise to anybody. Again, I have to say, these people predicting deflation, falling prices, you've got to just ask them, what's their data? I mean, are they just looking at one factor, or are they taking a multitude of factors in like we do on this channel? It's a head scratcher. Please let me know what you think down in the comments. Why are so many people continuing to be surprised by this, saying that there's going to be deflation, saying there's going to be a crash, and it continues to get worse each and every month? Please let me know down below. Also, keep in mind, as we've uncovered here on this channel many times, this number is about half of the real number. Real inflation is about 17, 18% if you look at a larger basket of items and cost of living areas that most people have to pay just to live a modern life. We're not talking about the Amish people, of course, but people that live in a modern society. Now, the people that have been calling for a crash and deflation, well, they're right. Something is crashing, and that's consumer sentiment, another low. And this is the numbers and figures for May. This just came out here today, June 10th. And again, another low for consumer sentiment. The U.S. consumer, the number one driver of the economy, a consumer-based economy. And that driver, the consumer, is getting very doomish and gloomish, right? So it's not just JJ here on this channel now being doom and gloom. It is most of the US population, aka the consumer, that is responsible for being the driver of the US economy. How are they the driver? Well, taking out loans, taking out debt, and spending money. That's what you have in a consumer-based, a service sector-based economy like the United States, where the number one export is debt. Basically, the US dollar and debt is the number one export of this country. Just another example about how things are continuing to get worse. We've got our friend out there again, Great Aunt Yellen. She rejects the idea that corporate greed is to blame for inflation. Now, we've been seeing different talking heads out there putting the blame here, putting the blame there. I have to disagree with her a bit. I do think that corporate greed is part of it. Greed has always been part of the inflation picture. Of course, there's a lot more happening right now than just corporate greed. If it was just corporate greed, then we would have seen the type of inflation that we're seeing now over the past many decades, right? Corporate greed is not something new. So the people out there blaming corporate greed for this inflationary situation, they're really missing a big part of the picture. They're missing just about all of the picture, because corporate greed is just part of many, many different factors here. Why do we talk about Miss Yellen? Well, she's pretty much always wrong, it seems like. So people ask, why do we talk about these people that are always wrong? Well, because she's the Treasury Secretary. Why they keep these people in these positions that are wrong most of the time, I do not know. Please let me know if you know down in comments. That's one mystery that I would really love to uncover here on this channel. Now, the housing bubble in Canada is even more insane than here in the US. And guess what the Bank of Canada is doing? Well, they're making it easier for people to borrow against their homes. Bank of Canada says some mortgage payments could jump by 45% as rates rise. But here's the kicker. The central bank highlights rising debt loads and falling home price are among the risks, but still allowing banks to give out home equity lines of credit. And yes, Canadians are depending more on these equity lines of credit as home prices continue to outpace wages. And now, similar to here in the US, where people are starting to really see their credit card balances skyrocket, people are having to go to these other forms of debt, lines of credit, home equity lines of credit in this case. This is how this ends. People are going to look for different ways to borrow more money to try to keep up with this. The home sellers that are not selling right now, a lot of them are going to start really going into the home equity lines of credit. How deep and how much debt will be issued by the banks? Are they going to be cautious, or do the banks know that there's a golden parachute waiting for them in the background, so they will continue to ramp up these types of debt instruments, home equity loans, more adjustable rate mortgages? Who knows? Maybe we'll see interest-only loans reemerge once again. We know that adjustable rate mortgages have recently made a comeback. We're now at a 14-year high, so kicking the can down the road to no end, it seems. Will the kicking of this can be hard enough to put off any deflation or falling prices? We'll have to see. It's going to be an interesting battle to watch these inflationary versus deflationary forces, that's for sure. Another one from great Aunt Yellen. Now she said this, get ready for this. Quote, nothing to suggest the US will have a recession. Folks, we're going to see how this one ages. We'll check back on this one in a few months, and we'll save this for you. And just like many of the other things that she said that have played out just the opposite, for example, the transitory inflation, her and Mr. Powell were both on the same boat for that one. We're going to see how this one ages. But according to her, nothing to suggest that the U.S. will have a recession. Unbelievable, but there it is, folks. Back to the housing market. Mortgage rates jump again. Buyers head to the sideline. We told you that June was going to be an interesting month. We've got the ramp up of the balance sheet that the buyers and lenders of last resort had promised they were going to do for so long. And now it is happening. And yes, you're going to see mortgage rates continue to rise as long as they keep this balance sheet reduction plan in progress. And the numbers out of the housing market as far as mortgage applications are pretty horrific. Mortgage applications decreased 6.5% from 1 week ago per the Mortgage Banker Association. The mortgage loan application volume is at its lowest level in 22 years, and the refinance index is 75% lower than 1 year ago. And I know many people here on this channel are saying, please let it crash. Do not start cutting rates again. Do not start increasing the balance sheet. Do not start buying mortgage-backed securities again like you were before. And let it crash. We need a correction. The thing is, when the housing market goes, so goes the rest of the economy. So it's going to be surprising. I'll be surprised if they let this thing keep dropping. But again, we'll have to see how it plays out. But another week of bad data for the housing market and mortgage applications. And it certainly is a hot topic. We even have articles out there from Market Watch. Prepare yourself. The U.S. housing market is at the beginning stages of the most significant contraction in activity since 2006. 2006, just a couple years before the previous housing bubble went bust. The big question, will it be a crash? Well, it could be a contraction. It could be a crash. I don't think it's going to be a crash. Yes, there could be a correction. We could see some price declines. We will see some price declines if things continue. My worry and concern is that the powers that be are going to reverse course and pump more air into this bubble. I hope not. I hope I'm wrong. I'll admit if I'm wrong. But that's just my gut feeling and my fear. Please let me know what you think. Where is the housing market headed? Please let me know what you think down in the comments. I'd be very interested to read your comments on this. Another housing market headline. This is what Business Insider has to say. U.S. mortgage applications are in, quote, meltdown, and the threat to house prices is growing. And when Reuters went out and polled several different economists, the Result was that economists think the Fed's going to keep on hiking rates, and many see 4 in a row increases, 450 basis point increases. And that, folks, could be the death blow to the housing market and the rest of the economy. But again, just because most economists think this is what's going to happen, just because they're believing what is being said, it doesn't mean that that's what is going to happen. And something else that's been really taking a turn for the worse lately, jobless claims. Jobless claims, quote, unexpectedly. Something else just got worse. Jobless claims unexpectedly rose to highest level since January. And that was as of last week. So jobless claims starting to tick up again. Just as we see so many people starting to get maxed out on debt, just as we're seeing the slowdown in the housing market. A lot of things are coming together to um, put us in this spiral that we're going to start seeing worsen as we continue to get into later into 2022. It's going to be a wild ride, folks. Stay well, stay safe, keep stacking. Bye for now. Peace.